Good morning, everyone. This is Marshall Gittler bringing you the morning comment for the 28th of November. OPEC simply kept its production ceiling unchanged at its meeting yesterday, as expected, setting off a further decline in oil prices. I expect oil prices to fall further as Saudi Arabia tries to push U.S. shale producers out of the market and punishes Russia for supporting Syrian President Assad. I looked at the correlation between oil prices and currencies over the last 5 years. The pairs that are most likely to be hit by falling oil prices are dollar Canada, Aussie dollar, Aussie yen, dollar Noki, and dollar ruble. It's noticeable that although Aussie yen is very high up the list, dollar yen is virtually uncorrelated. Take a look at the whole table in today's comment on our website. Lower oil prices mean lower inflation, and German and French 10-year bond yields hit record lows yesterday. ECB President Draghi reiterated that he's open to expanding asset purchases to prevent deflation, which looks to be coming closer. German headline inflation slowed further in November. Falling oil prices will make managing monetary policy more difficult in the Eurozone. I think it's a negative for the euro. Japan's inflation slowed again in November for the third month in a row, while retail sales fell, demonstrating the difficulty in producing the virtuous circle of higher inflation leading to higher consumption and a more vigorous economy. However, industrial production unexpectedly rose, which suggests that maybe the strategy of yen depreciation is finally starting to boost exports. If so, look for the government to continue to emphasize what's working. While I can't see the Bank of Japan taking any further steps in the near future, I can see the government quietly encouraging the yen lower. I remain bearish to yen. Lower inflation also means less need for gold as a hedge against inflation, and indeed gold prices fell yesterday. This weekend, Switzerland holds its gold referendum, and the indications from the latest poll are that it will not pass. The poll had 47% voting no and only 38% yes, with 15% no answer or undecided. This makes it quite unlikely the measure will pass. Without the promise of large-scale buying from Switzerland, gold investors have little to look forward to. I'd expect the price to fall further on disappointment if and when the measure does fail. As for today's data, the main event will be the Eurozone CPI for November. A week ahead of the ECB's crucial December meeting, the low inflation confirms President Draghi's concern that a stronger recovery is unlikely and reinforces my opinion that the euro has plenty of room on the downside. From Canada, we have September and Q3 GDP coming out. As for speakers, ECB Governing Council member Carlos Costa and Jens Weidmann speak. The Bundesbank president spoke on Thursday as well and said that solid state finances are needed to assist the bank to concentrate on its mandate of price stability. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Gittler, head of Global FX Strategy at IronFX Global, wishing you solid trading.